probably a long 24 hours for some of you, and we're coming into the home stretch as far as I understand, so hopefully you can bear with me just for this short period of time that I'll be on with you, and hopefully I can give you some information that you can take away from here and be able to make some money. Uh, First off, just a little bit about me before we begin, in case you haven't been in one of my sessions before. I've been trading Forex exclusively since 2002, focusing all of my attention on this market. And for about the past 6 years or so, I have been providing daily market analysis for the 7 major currency pairs through Forex Traders Daily in a live trade room. Now, as I get started today, I'm going to share with you some of the basic technical analysis skills that I use in my trading that I've been using for the past 10 years or so and in my live trade room every day. And what I use it for is to remove some of the, the noise that can make you jump out of some of the best trades or hold on to some of the losing trades. And then I will give you some clear strategies for entering and exiting the market that can provide some consistent trading results. And that's really what it's all about for me. And of course, in a few moments, I'll pull up the live charts and we'll go through some live market examples. So first off, what I want to do is I want you to take a look at this list of technical indicators that are available. A lot of Forex traders, have used charts, the MetaTrader charts, MT4 charts, and this is just a list of the indicators that are available on their charts. And there are dozens to choose from here. And of course, there's multiple variations of many of these, like moving averages, and not to mention the different interpretations and uses for some of the tools like trend lines or moving averages. So just how do you decide which ones of these to use? Because, and of course, every guru out there has their own take on these. So how do you decide which ones to use? Because you could spend months or even years trying to try each one of these, and you might have some success, and more likely you might have some failure. Now, I'm in no way saying that all of these or any of these are bad, because used correctly in the right market conditions, each of these has some value. But just think, if you tried to apply only half of these to your chart, you could barely see the candlesticks for all the bells and whistles that would be on the chart. So what I'm trying to get you to understand is, how do you whittle this list down and begin developing a winning entry and exit strategy? Several years ago, I realized that there were some clear obstacles that I was facing as I was beginning my trading that were keeping me from being a successful trader. And removing those obstacles would be the first step in getting my trading on track. And the first obstacle that I figured out was that I was having information overload. I was spread way too thin. I was watching so many of those indicators that it was nearly impossible to make sense of it all. Some of them would say buy, some of them would say sell, and it became very confusing. Remember that long list that I just showed you? I realized I needed to keep it simple, so I picked a few of those indicators that made sense to me. Now, for you, that could be 2 indicators. For you, it could be 10 indicators. And that's fine. The key is to pick them and stick with them. So, because only then can you master them and really get to know how they work. You see, I realized it was better for me to be a master of a few of those than to be a slave to too many. The next key for me was to develop a strategy around those few indicators that I chose that I could trust, and then apply them in a consistent manner. And that's really what it's going to be about, using them in the same way all the time once you develop a winning strategy. Essentially, you have to employ the strategy the same way every time you look at the market in a mechanical type process. I realized I needed to develop a strategy that works consistently over time, using the strategy consistently also. For me, trading is not one trade or 10 trades for that matter. Trading is something that you work on over dozens or hundreds of trades. And if you follow a similar strategy over time, that's going to be consistent trading. Consistent trading doesn't mean you're never going to lose. It just means you're using the same strategy all the time. Now, before I get into the live charts, you need to understand a little bit about my personal trading strategy. I'm a keep it simple kind of guy, and you're probably going to find that over the next hour or so that I'm a pretty simple kind of guy. I like to keep it simple. So I'm going to start small from the very beginning and build up from there. Like I said, I'm exclusively a Forex trader, so you need to understand that this strategy may apply to other markets, but I know that it works for me and works for the Forex. So let me first off, like I say, I'm going to start from the foundation. I'm going to start off with my view of support and resistance. Now everybody's heard of support and resistance, and you've gotten multiple interpretations, but I want to make sure you understand where I'm coming from with support and resistance. Now these are what I consider classic barriers in the market. Think of them like a brick wall in the market. However, there's many different indicators from that list that you can use to identify these levels. Now, first off, of course, you could just simply draw a horizontal line on the chart to represent a level of support and resistance. But of course, there's, again, many interpretations of drawing those horizontal lines. Are you putting it at the top of a large spike wick? Are you putting it at the top of multiple candles? There's going to be different ways to interpret that, and I'll show you that on the live charts. But that's just the beginning. Additionally, other than just drawing a horizontal line, you could use tools like Fibonacci to mathematically identify those naturally recurring levels of support and resistance. Now, I don't really have enough time here in this session today to cover Fibonacci. That would just take a lot of time. However, there's a ton of information out there about Fibonacci. So if you aren't too familiar with it, I would get to know it. I would recommend doing a little research and getting to know how it works. Anyway, you could also use tools like pivot point levels to calculate potential support and resistance, or using historical data from the previous day. But again, the interpretation of tools like Fibonacci and pivot point levels have a different meaning to different people. Take pivot points for instance. Are they better to interpret them on a daily chart, a weekly chart? They're just different ways to interpret these different tools. Fibonacci, there's multiple ways to look at Fibonacci and different ranges that you can measure using that tool. So there's just different ways to look at these. Or you could simply use a multitude of variations of moving averages, multiple variations of moving averages to project support and resistance based on, price averages. Now, whichever one you decide to use, they're all primarily helping you do the same thing. What I'm trying to boil all this down to is they're all doing simply the same thing. They're trying to identify potential barriers, or what I like to sometimes refer to them as bumps in the market, those brick walls. They're trying to identify where the market might continue after it passes through that barrier, or reverse if it hits that barrier and bounces off of it. And what I think is that these are fairly easy to identify once you know what to look for, which in turn makes them a widely used common indicator. And what I like also about identifying these levels of support and resistance is that often you could look back in time, sometimes days, weeks, months, or even sometimes years, and find that the market will recognize these levels over and over again. So as I kind of alluded to a minute ago, as with any barrier or these bumps or walls in the market, there's really going to be two main potential scenarios. And that's really all it boils down to with any type of support, resistance, moving average, pivot point, Fibonacci, anything that recognizes these barriers in the market. There's really two main scenarios. And these are going to be the key decision points that you will need to recognize when you're deciding to take a trade or not. First, of course, is the potential bounce. And this is where we expect that the market will stop or stall for a period of time, maybe short or maybe long, and then reverse and go back in the other direction. So that's our first potential scenario. The next scenario is that there's a potential break. And this is when the market passes through one of those speed bumps or barriers and continues in the direction that it was previously moving. Or you might even consider that direction of the trend. So let me stop right here for a moment and talk a little bit about the trend. Trends are the overall or general direction of prices consistently moving over time. Now, of course, there are long-term trends and short-term trends, but the one thing I can tell you is that trends are great to follow, but trends can and will likely change. We don't see a currency pair in the Forex go in one single direction forever. They naturally go up and down as trends change. And it's important for traders, especially technical traders, to realize and recognize those clues that point us to trend change. Now, there's going to, again, be many tools to help you identify those changes in the trend. And many of them are very useful in identifying when the trend is beginning to change or has potential to change. And we'll want to be able to recognize those. So that's the basis of where I'm coming from. My strategy that I've been using for many years to be a successful trader has found its basis on one of the most simple principles in the market of support and resistance, trying to find those barriers or those breaking points or bouncing points where the market's most likely to turn. The reason I do that is because when I find these levels, when I find these barriers in the market, it helps me identify what I consider the lowest risk and highest potential reward scenarios for entering or exiting the market. Well, specifically entering, because that's really what it's about. You want a low risk, high potential reward. So as the market approaches a resistance or a price ceiling where the market is going to have a difficult time pressing higher, that becomes your lowest risk for reversal. At that point, it becomes high risk for buying because it's likely to find resistance, as we'll see, that has consistently shown in the past and could go back down. Could be short or long, but it's a higher risk when you're reaching into a barrier of resistance or into support. But there's a lower risk. In other words, there's a smaller stop placement, a smaller potential loss if you're looking for that to bounce, because your stops will be likely smaller, and then you can capitalize on the profit as it goes back in the other direction. Now, this just isn't simply a reversal strategy, because we also know on the other side of that resistance that if it breaks through there, we're likely looking for a continuation. Remember, there's two specific scenarios, a bounce or break. So if it does break through there, it can provide a low risk, high reward scenario as a continuation, and I'll point that out. In fact, let me go ahead and switch over to the live charts and see if I can figure out how to do that. This has been a long time since I have used this presentation software on Novi, and I want to make sure I can remember how to show my chart. So if you just bear with me just for a second, it's saying that the projector is loading. I'm going to bring this over here. As soon as I can figure out how to get this to do this. That's not what I wanted to do. Let me see. Maybe that's what I want to do. There we go. I think I got it now. Is everybody seeing my charts now? Hopefully you are. All right. What I did is, thanks. It looks like everybody's seeing them. It looks like I figured it out. What I want to do here from the beginning is just build from the start. You know, I'm building from a foundation. I'm going to start adding bricks to those walls. Remember I said that support and resistance are kind of like walls in the market. So I want to start from the foundation. So what I did before the presentation is I actually wiped all the indicators off of my chart so I could start from scratch, so you could see how I begin my daily process. And this will even help us as we go into our trading for the day today. So what I'm going to do is I'm going to start all the way out here on the daily chart. And this is the daily chart for the euro dollar. And I'm going to begin interpreting or trying to find out where those most likely those barriers will be in the market. So first off, I'm going to take a couple of horizontal lines, and this is our first way that we can decide where those barriers are be. And so here, right around the 1.3400 level, I have the line at 1.3396, but give or take a couple of pips here and there. But we followed this black line backwards, and we can see the market is currently finding resistance right now. It's having a difficult time breaking through this barrier. You follow it back in time, and as I mentioned, you can consistently see that behavior. Uh, you can see that price behavior back in time. So we go all the way back here into June 18th, and it found resistance. June 18, June 12, we found resistance there. And then you could go all the way back here. Again, consistent price behavior finds resistance back here on the left-hand side back in February of this year. Then we can go back in time all the way back into January, and we could see a consistent price behavior. So we didn't have to come up with a magic crystal ball here in the current time frame to know that there would be potential resistance here, a difficult time for the market to continue to pressure higher, because we could go back all the way to January and see that. And it's likely if we went out to the weekly chart or the monthly chart, we could also go back and further in time and see other historical data that shows us where the market has had consistent behavior. But I'll say that not only has it had resistance here, it's also seen support, because you can see here, remember, this is the daily chart. Each one of these candlesticks represents a day period of time. Here is 1, 2, 3, 4 days where it found support on the top side of that line. So not only have we found multiple instances of resistance, but we're now finding back here into February, we also found support in the same time frame. So it's my expectation that as long as we stay under that simple black line there, that there's resistance, and over the past several days, we can see that it's continued to bounce back down. And that gives me an expectation for the euro dollar right now and gives me a directional purpose. If it breaks through there, and when I'm talking about a break, and this is a great example here on the euro dollar, if you think of that black line like a brick wall, when I talk about a break through that brick wall, typically I'm looking for an open and close, a clear single candle body above that black line, above that resistance, to give me a clue that this is going to continue higher. Because simply, as we can see so far, we've only seen the market spike above it. We saw one day the blue candle there where it broke above it, then the next day turned right back around and got right back underneath it. So we haven't seen a full break of this barrier of 3,400. So for those folks that were just expecting a quick spike above it and that it would just continue up forever or continue the uptrend, they're worried right now because it didn't open and close above it. So it kept me out of any buy scenarios so far because we didn't see that full candle body, one single candle body clearly open and close above it. Until I see that, I think there's a greater expectation of resistance and potential reversal to go back down. So that's just one line, and it's giving us a ton of information about this one line. And so let's add some more information on here. Well, as we go back down here into the chart, we can find here into the 3295 level, 3300 level, we again follow that back in time. Do we see consistent price behavior around that line? That's what I'm looking for. I'm not looking for a single wick. I'm not looking for multiple candle bodies. What I'm looking for is wicks and bodies showing consistent behavior around this level. So follow that bottom black line backwards. And we can see multiple days, again, over a week's worth of time, finding resistance right here. So there's an expectation that as it comes back down on top of that level, we find support, because right now we're on top of it, so that becomes support. If we get back underneath it, guess what? That same level of support could become resistance. And I can show you just along that line where we've seen multiple instances where the price has been consistent. You know, traders, people, you, me, and thousands of other traders around the world act consistently all the time. What do I mean by acting consistently? Well, what I mean is traders tend to follow their comfort zone. Okay, traders tend to follow their comfort zone. They go with what's comfortable. They say, well, last time we found support, or last time we found resistance at this price level, then it's likely that this time we'll look for that similar price action around that price level. So now we can see down here into the 3,300 level that there's a consistent at price action around here. We know that as long as it sits on top of it, there's support. If it breaks underneath it, we look for a continuation down. So follow it back. We see this area right here of resistance, multiple days. But follow it even further back. We can see resistance and support over about a 4 or 5 day period of time right here. Consistent behavior around there. But again, follow it back to the left-hand side of the chart. We can see multiple days, 8, 9 days, where it found support on top of this barrier here into the 3290s, 3300 level, and resistance on the left-hand side. So this is already showing us a pretty clear picture for the euro dollar, just putting these two simple horizontal lines on the daily chart, that right now we're finding consistent resistance into the 1.3390s and consistent support into the 1.3290. So as long as it stays in there, we have low risk buying opportunities at the bottom, low risk selling opportunities at the top, and then if it breaks through, punctures through, opens and closes on either side of one of those levels, we'll look for a continuation, whether it's lower or higher. You know, it's easy to say, well, the historical trend here is up. That's easy to say. We've been looking at, since going back down here into the beginning of July, it's been going up. But the question is, how long will it continue up? Is it simply going to just continue on, or will we look for clear indications of reversal? And that's what we're going to continue to try and do as we go through this euro dollar. So those are our first two. You know, if it breaks above the high point, I expect we'll likely look for it back up here into the 3450s. Why? Because we've seen some consistent behavior, not just because of the current spike, but go back here to the left-hand side of the chart. And if we go above that, we can likely come back up here where we saw multiple days back in time, finding support on top of that line. And of course, I could continue to go up as we can see historical support and resistance back in history. Then on the downside, if we break through this 3,300 level, we could likely look for it to head back down here into the 3240s because we have seen consistent behavior around this level as support. And beyond that, we go back to the left-hand side of the chart. There's consistent behavior into 3240. So not only now are we developing areas of support and resistance, those areas that are barriers or brick walls where the market is having a difficult time breaking through, but we know where the next barrier is. So that next barrier, guess what? That becomes a potential profit target. If it breaks above, we get a solid break above 3,400 at this top line right here, we know we can target 3,450. If it breaks above 3,450, we know we can target 3,515 because those are our next two barriers higher. If it goes underneath 3,300, which is our current support, then we could target all the way back down to 3,240. It gives us a clear basis for not only entering, whether it's a bounce off of a level or a break of a level, not only for entering, but also as a targeted zone of where the next level will be. And I could continue to go back in history and look at multiple times where we can find support and resistance. Now that's just one tool. Again, there's multiple tools. So what I want to do is just add some in here. So first off, let's take a trend line. I'm going to zoom in a little bit here on the daily chart and zoom it back in here. This is the same trend we were looking at. I'm also going to add a trend line. Now what I like to do when I'm interpreting my trend lines, and this is, you know, my interpretation of trend lines, the easiest way I define an uptrend is higher highs and higher lows. Easiest way to define a trend, higher highs and higher lows. So I know that when the market makes a peak high, that it could be or is potentially the highest peak of the trend. So we can see that the peak high right now comes up here into the 1.3450. So I know that everything between that peak high and the bottom low is part of the uptrend. Everything after that peak high, not yet interpreted as part of that uptrend. So I want to connect that trend line in the lows within this uptrend. So we've connected it to the lowest low and this current low, which is before the peak high. So we can consistently see higher highs and higher lows between those peak points, those two data points. So we can already see that the market came down yesterday. It tackled down here into the blue trend line, which is now our trend line. And again, that connects at the low and this low right here because that's before the highest high. And we can see that yesterday it came right down into the 1.3300, not only tacking down into, tacking down into that trend line, but into that historical area of support and resistance that we discovered already prior to even putting that trend line there. So we knew that there was likely a buy opportunity because there was a bounce that could happen. What's the other opportunity? What's the other opportunity that you could have taken right there? If it would have broken underneath 32.95, 3,300, we would have likely looked for it to continue to go back down. It does look, you know, I just saw I just saw a great uh, question or a comment there that just popped up. Looks great in hindsight, but I will tell you this right now, that when it touched that blue trend line and when it touched 1.3300 yesterday, I was in a buy. I took a buy. This is a live chart. This is not a picture. This is a live chart. And when it touched there yesterday, I took a buy into the 1.3300 level. So it might look great in hindsight, but it also looks great in real time. So let's take that now down. What I want to do is take that same information, and I'm going to start taking that same information, go down to smaller compressions. Actually, let's do one thing here. I'm going to take Fibonacci and just throw it in here like this. This is Fibonacci from the same peak low and the same peak high of that same trend. And we also found the 0.236 Fibonacci retracement level sitting right there into that same area, right into the upper 3200s into that trend line. So again, gave me some confidence in looking for support into that level. So we have Fibonacci, we have the trend line, historical support and resistance, all lined up there at 1.3300, giving me confidence to buy it with a low risk scenario. Why was it low risk? Because I knew I didn't want it to break underneath that trend line. I knew I didn't want to break under there, so I gave me a very low risk place to put a stop underneath that trend line, underneath that fib, and a profit target to go back up as high as possible, 3350, 3400. Those became my profit targets on the rally back higher. All right, now let's take that same information. Let's scoot down here to the 4-hour chart. Scooting it down to the 4-hour chart, as it refreshes here, we can see, and I'll explain some of these other lines here in a moment, but as I'm going to zoom it out so we can see that full extent of that blue trend line, as it came down into that blue trend line, and as it came down into that historical area of support and resistance, and that Fibonacci gave us an opportunity to take a buy. So if it rallies today back into 3,400, we already have a plan of attack. For me, it's about having a plan before the market gets there. I know that as it rallies higher into our next resistance, there becomes a plan of attack that I have a low risk, high reward scenario for selling it. If it breaks through, I flip that position to go back up. Same thing back down here. If it comes back down into the trend line, back down into that fib, I have a plan of attack. It gives me an opportunity to buy it. If it breaks underneath it, I flip the position to the sell. What I like to do actually is once I hone in these lines, and here I get down here to the 4-hour chart, and I can move these lines around a little bit to give me a clearer, more concise level of support as I look back here in time on the 4-hour chart. And what I actually like to do is begin highlighting some of these levels on the chart. I'll take a highlight like this and I'll throw it in there so I know that that is my zone of support. I know that that's my zone of support. As long as it stays above it, there's more potential for it to break or continue to bounce up and go back up. If it opens and closes within or underneath that trend line or underneath that green shaded area, I know that there's potential for this to go back down again. Let's add in another highlight. And I'm just going to bring another line in here because I'm honing this in a little bit. I'm going to bring another highlight in here so we can see where our zone of resistance currently is. And I'll bring it back here like this. I'm just going to make it a different color so we can see where that is. Let's make it this blue color. So right now, the blue shaded area is our zone of resistance. The green area is our zone of support. Those become low risk, high reward areas because we know that if we were to sell it in the blue zone, our risk, our stop, or our potential loss is just above that blue zone. If we were to buy it in the green zone, our risk, our potential loss is just underneath it. And there's always going to be risk. There's no trade that there's never going to be any risk on. There's always going to be risk. So what we're trying to do is have a measured amount of risk, a smaller amount of risk, and a higher potential gain. So because if we were to sell it in the blue zone, our target is the green zone. Buy it in the green zone, our target is the blue zone. That way we can maximize the potential gain on any move that does begin to happen. And even here on the smaller compression, now that we can see where all that information comes from down here at the bottom of the chart, I'm going to zoom it in again so we can see this a little bit better. Even here on the smaller compression, as we begin looking at those same styles of indicators, I'll even take Fibonacci and go from the low here where the trend line connects to the current high. And we can see that yesterday, not only was it testing that green shaded area, the blue trend line, historical support resistance, the 236 fib from the longer daily range, we were also testing in at the 1.3298 level into the 0.618 Fibonacci of this shorter range. So there was multiple indications that told me that right here into this green shaded area was a spot in which I wanted to begin looking for a trade. Okay, and so that's where I began looking for a low risk, high reward potential opportunity to buy this. Now there's a couple of other indicators that you see here on my chart, and there's some other tools that I use to help me identify low risk, high reward opportunities. First off, those wavy lines that you see up in my chart, these orange and yellow and blue charts, blue lines that are above the current market. Those are the bank flow levels that are provided by Forex Traders Daily. These bank flow levels help us identify where banks and hedge funds have it's the order flow information from the world's banks and hedge funds. So those are provided to us. We put them as an indicator on the chart to help us identify where potential sellers will be jumping into the market or potential buyers will be jumping in the market. And if you just follow this back in time, yes, there are some times when it pierces or breaks through those bank flow levels, and that's always going to be the case, but in a more consistent manner, often as it approaches these resistance or as it approaches those sell levels, there's a higher potential for resistance into those bank flow order levels that are sitting above the market. So we don't have them yet today. They haven't been published yet today, but as we can see where yesterday's bank flow sell levels are, so not only did I identify the blue shaded area as historical resistance from the daily chart, we can also see now that yesterday's bank flow levels sit there. If today's bank flow levels, when they're published later on today, are also in a consistent area right there into that blue shaded area, and I don't see any reason why they wouldn't be, because we haven't seen a strong bullish movement out of the market. In fact, it's been more bearish. If these bank flow levels for today come out here into the blue shaded area, again, it's increasing my confidence. It's increasing my confidence that there's going to be resistance here. There's going to be an influx of sellers. So we started out there on the daily chart, found resistance there, consistent resistance. Then we whittled it back down here. Now we can see that there's order flow. There's bank order flow information in that same level. So if we see the market challenge into the blue shaded area today, if it spikes there in a quick fashion, that becomes a selling opportunity. So I really am beginning to develop a simple strategy here for the market today. If it challenges here into the blue shaded area, I know I want to think about selling it. If it breaks through there, my stop placement, my risk is just above that blue zone. That way, if it breaks through and continues higher, I take a smaller loss. But if it does bounce, I'm able to capture profit as it goes back down again. Now, the same thing happened yesterday, but we didn't have the bank flow levels. But I had confidence that we were looking at least for some support there. So not always will we see that indicator agreeing, because we didn't have the bank flow buy levels down there. And there will be buy levels. If I zoom it out one time, you can see that where we have consistent sell levels and buy levels along here, along the 4-hour chart. So as it tests into those sell levels, as it tests into that historical resistance for the day today, if we see a challenge of the 3,400 level, it's likely I'll be looking to sell this currency pair. And I agree, it is amazing that we don't see recent buy levels, which my interpretation of that is, my personal take on that is, the reason we don't see buy levels is that, at least at this current moment, since we are challenging into this resistance, consistently challenging into this resistance, that the buyers aren't really looking to buy it into that resistance. Remember, I said that these levels are barriers in the market. Think of them like a brick wall. And when we're this close to that brick wall, think of that blue shaded area as a brick wall. When you're this close to that brick wall, it becomes less likely that you want to be buying it. If it dips down into support, then that becomes a buy. But this close, remember, go back to your own trading, your trading or retail type of a motto: buy low, sell high. That is always going to help you identify your lowest risk, highest reward scenarios. So if you're looking to buy this, you want it to dip. You want it to go down to the trend line, the green shaded area, into support before you look to buy it. The closer you get to that resistance, the blue shaded area, the bank flow levels, the less likely it is that you want to buy it, because there's a higher degree of expectation that we're looking for it to bounce back down. And it's interesting pointing out there that it doesn't have buy levels right now, and we can see that the market has fallen off of those highs in a consistent manner over the past few days. If we get the breakdown underneath this green shaded area today, and I'm going to move this arrow over here, and I'm going to add another arrow here, and these black arrows just show me my potential opportunities for the day. If we get a breakdown of that green zone, it breaks down underneath those historical support levels, the trend line, the Fibonacci's that we've identified there. If it breaks down underneath that zone, I'm looking then not for support there and a buying opportunity, but that becomes an opportunity to sell it as we look for reversal of the trend. And I spoke about that earlier, recognizing reversal of the trend, and that's when that becomes a part of the scenario, when we're looking for it to go back down. Now, let me mention one other tool that's on this chart, and I've already seen a couple of people mentioning it. The green and red bar that's at the bottom, that's one part of the Forex Black Book indicator. The arrows that you see up into my chart are a second part of the Forex Black Book indicator, and the targets that you see in the middle of the chart, the D4, D3, D2, D1, those are all part of our Forex Black Book indicator, and that indicator also provides opportunities when the market is in agreement, okay? So as you can see down here, a green trend bar down here, what we want to see are buying opportunities or green arrows. So if you follow it back in time along this green trend bar, when you see green arrows, those provided buying opportunities. Now I'll say again, the best opportunities to buy it are always going to come on dips into support. So you can see the market did fall from the blue shaded area here, came back down into this area, into the green zone, found support, gave us a couple of green arrows and a buying opportunity as it started rallying back up here towards the blue shaded area. You go back in time even further, you go back over here, there's a green arrow back into August 2nd. You can see the buy opportunity would have been right around the 3270 level, and over time it started pushing higher, went all the way back up here into the 3390, 3400 level. So that dip back down. So what we're looking for with that indicator is, of course, clear areas of support, but we're also looking for that indicator to show us when momentum is shifting back in the direction of that green bar. So when you see the green bar, you're looking for a red arrow. If you see a red bar, you're looking for a red arrow. Does that always mean it's never going to turn around? I don't think so, but it gives you a clear clue of where that potentially is going to happen. Well, right now we see red arrows showing that the momentum is shifting down, but we see a green trend bar. So it doesn't give us a real buying opportunity because we see some disagreement in there. If we see a dip lower and it goes back down to the green zone or even lower and we start to see bank flow buy levels come back into play, that may give us a buying opportunity, but at least at this point, we don't see a buying opportunity in agreement with that trend bar. So all of these are helping us identify our lowest risk, highest reward opportunity to make a trade. And again, those targets give you a targeted level to shoot for as it goes down or back up in the direction of whatever trend takes place. All right, that's all one currency pair. I want to do the same thing. I want to continue on and do the same thing on a couple of different currency pairs to give you an idea how this works across the board. It's not just working on one currency pair, it works across the board. So let's give you an idea using those same types of strategies on a couple of other currency pairs. And I'll start next on the pound dollar. A lot of folks like to trade this currency pair, and we'll go over here to this one next. And I'm just going to start out here on the daily chart again and begin looking at some areas of consistent price behavior. And I'm going to put a line there. I'm going to put a line here. And we can see historical resistance here, and support over on the left-hand side. I'll also bring a line to about right here, right around the 55.40 level. Interesting now, challenging into that 55.40 level as we speak, coming down off of the highs. And let's put one more line right about right here. So now we can see where some historical areas of support and resistance, the next barrier of support and resistance will be coming down off of it right now. Now again, if I'm looking to sell this, does this make sense as a low risk, high reward selling opportunity? Yes, the market is going down. The last two candlesticks we see here is going down. But I've already established the fact that as it's going down, if it's going to be going down, your best lowest risk, highest reward opportunity to sell it is as it rallies into resistance, not as it comes back down into support. So as it comes back down into here, we could see 55.40 is already historically showing as resistance here and some consistent resistance back here. So we know that right now we don't want to sell it. If we're looking to sell this, we want it to go up into resistance first. However, as we're looking for buying opportunities, this becomes an area where we might consider buying it if the price action dictates support here into the 55.40 level. So we've already now established resistance and support here for the pound dollar all the way out here on the daily chart. Now let's take that information down to the 4-hour chart so we can begin, again, establishing a potential trading scenario. So as we look at this, we can see, first off, let's go ahead and throw a trend line in here. Let's throw the trend line right here, because I know that if this continues to pressure lower, that becomes my next potential indication of support, because we've connected the lows. Let me take the bank flows off for a second, because I think they're clouding this up a little bit. So let me take those bank flow indicators off for just a moment. I'll just do this. I'll take it off the 4-hour chart. And we can see it coming down now into the 1.5540 level. The next barrier down into the 1.5440 level is closer to that trend line. It becomes much closer to that trend line, and I expect that becomes a better barrier of support down there closer to that trend line. If I put a shorter trend line here, let's just put the trend line right here, we can already see that the market has broken through that shorter trend line. It broke through it all the way up here at the top, and now it is consistently going down. So since we're underneath that shorter trend line, my expectation would have been sells on rallies into resistance, because it broke through that shorter trend line. If it continues to pressure underneath 55.40, then we'll continue to look for it to go lower. The green trend bar, of course, with the Forex Black Book shows that we'd be looking for buys. But again, buys happen on dips. And so if you go back in time, the last green arrow we had came on this much deeper dip lower. So I think a deeper dip lower, a push back down to this 54.40 level would be more likely the area that we'd want to look for a good buying opportunity for the pound dollar. Now, there could be some buying support here. We'll have to wait and see. This is our first spike into it. We could go here, wait for some clear clues of support, 2, 3, and 4 candles showing support into the 55.40 level, but we're looking for support here into that zone. Let's actually zoom it in here. Actually, let's put the Fibonacci's on here. Go from the low to the high. Low to high puts Fibonacci. The 236 fib sits down here closer towards the 5,500 level. So we're still a little ways from that. And the 382 sits all the way down here into 5370. So we're still a little ways from matching into those naturally recurring supports with Fibonacci. I'm going to actually add them here of the shorter range also, actually adding fibs into the shorter range. So what this is now showing me is that there's actually a little bit more of an expectation that this continues to pressure lower into those Fibonacci levels and into the trend line. So I'm not looking to take a buy here yet, because there's still an expectation that this could continue to pressure lower through the support. But if we open and close underneath 55.40 and underneath 55.35 or so, then we could look for a continuation in the direction of the current price movement as it goes lower. So buy low, sell high helps me find my highest reward, lowest risk scenario. So here I'm not looking to sell it, because we would be selling into a price support. But given the price action that we're seeing, some bearish price action, I'm not really actually looking to buy it yet until it matches in with some more critical support backed up with other indicators. Now I'm going to add the bank flow levels back on here onto this 4-hour chart just to see how they match up from yesterday. And again, we don't have today's levels quite yet, but yesterday's levels also show some more support down there where those Fibonacci levels sit. And I don't think that that's why those bank flow levels are there because Fibonacci. I just think that that happens to be where the order flow information is coming from. And so we could see those levels sitting just underneath the current market. So it would be my expectation, I'm going to zoom in here a little bit, that what we're looking for is a breakdown of 55.40 and a continuation, whether it's into the bank flow levels or the longer term blue trend line that sits down there lower, or even into those Fibonacci levels. So not looking to take a sell right now, because, or a buy right now, but even though it's testing into the support, because there's an expectation it's going to continue lower. If it does find support and I'm looking to buy it or sell it, I want it to go up into resistance next anyways before I would look to sell it. All right, let's move on. I want to go through several other currency pairs as we look for new trading opportunities for the day today. This US CAD is into a trading opportunity that I've been watching for the past couple of days. In fact, I am already in a sell here on the US CAD. I entered it earlier today, earlier this morning, and yesterday evening. I entered into a sell here on the US CAD. Let's talk about the reasons why. First off, let's put some of those historical areas of support and resistance. I'm going to put a couple of lines here on the daily chart. I know that this is a consistent area of resistance back here in the past. In fact, I'm going to do what I did on the other chart and put a couple of highlights here. We'll just say this blue shaded area I knew was going to be historical resistance. The next area we're looking for support would be down here into this area of congestion, underneath this area of congestion down into the 104.70s. The next area of support would come all the way down here into the 104.20 level. So we have historical area of resistance into the blue shaded area. We have support into the 104.70 level and 104.20 level as our next areas of support. Interesting here is we also have the red trend bar with the Forex Black Book indicator showing us that over the past few weeks we have been in a bearish move, and it's just only recently in the past 4 days have we seen some bullish movement out of this chart. I also want to put a trend line here because this became a consistent level where I began buying several days ago. In my trade room and on my daily videos that I produce on a daily basis here for the US CAD, over the past 3 weeks, I've actually been buying the US CAD as it challenged here into this blue trend line and dipped into the support. So that became an opportunity for me as a buy, and now that has come to fruition as it found support down here into this historical area of support and into that trend line. Buying support down there became a profitable opportunity. Now the opposite is becoming in fact. Remember, buy low, sell high. As it comes here into this blue shaded area, I'm looking more likely for selling opportunities rather than buying. Now if it breaks through 105.80 and through that blue shaded area, all that changes, and then we look for it to continue to pressure higher for the US CAD. But anybody buying down here has been able to capture profit as it's gone up. Anybody looking to sell, this is becoming their first opportunities to look for a sell for the US CAD. Now let's take that information down to the 4-hour chart, begin honing this in a little bit. And as we look at it here on the 4-hour chart, we can see that there is, of course, yesterday's bank flow level sitting up here close to this blue shaded area. The bank flow order flow information also showing potential resistance into the 105.50s and 60s. So if you're looking to sell it, that becomes an opportunity to scale. The bank flow levels give you a scale and approach and a logical, mechanical way to show your risk or evaluate your risk, because your stops would go just above that blue shaded area and above that blue line within the bank flow levels. Coming back down to the bottom, we can see that the bank flow levels over the past 3 weeks, the market was sitting down into those bank flow order flow information into that same blue trend line down there, giving you an opportunity to look for buys. And that's what I was focused on over the past 3 weeks, was those buys, and have been able to capture profit as it has continued higher. Now, again, if it falls off of this blue shaded area, my next profit target comes all the way back down here into the 104.70s. That becomes the next area to watch for a profit target. Beyond that, we're back into the 104.20s. And then beyond that, I think we're likely looking for it all the way back down here into 103.50. But most interesting to me is that the bank flow levels are here. And one other tool that some other traders might be familiar with is harmonic trading. If you're familiar with harmonic trading, and that's using harmony between Fibonacci levels, basically different trend ranges and different Fibonacci levels, there's another tool that you might have seen out there. It's a harmonic indicator tool, and I'm actually just going to draw in a couple of simple triangles to show you where that harmonic pattern has developed. And if I go here, and we can see that the first left triangle, the XAB point for the harmonic pattern, is here on the left-hand side. And if you want to look at another pattern for the harmonic pattern, we would look right here. So right now you can start to see a bearish crab. So if you're familiar with harmonic patterns, in the market, and Gartley patterns for that matter. This is what they would consider a bearish crab pattern. And interesting here is that it also comes into play right there into that blue shaded area. Right there, not only where the blue shaded area is, but also these bank flow, order flow levels. Also, if I take Fibonacci, and I'm going to take those triangles off because they can become very distracting here on the chart. If you take Fibonacci of the previous downtrend range, and I'm going to go from the highest high on the left-hand side of the chart down to the lowest low we see at the bottom, we can see the 0.886 fib sitting right here in the middle of that blue zone into the 105.65 level. So not only do we have historical resistance into the blue zone, we have the bank flow level sitting into the blue zone, we have what I just showed you with that harmonic pattern, the bearish crab, developing there into that blue shaded area. And we also have the 886 fib sitting right there into that blue shaded area. So at this point, just to answer a question that just came up, Neil, I am already in this. I took a sell here into the 105.50 level in the midst of all those bank flow levels and close to that 0.886 fib there into the 105.65. I'm already in a short looking for this to go down. My risk is very low compared to the potential reward. My risk is just above that blue shaded area. My stop placement, again, is just above the blue shaded area. I stand to lose a smaller amount compared to the gain. The gain for that harmonic pattern would be all the way down to the 103.50 level, but I also know that 104.75 and 104.20 become potential profit targets on the way back down. So again, I'm already in short. And interesting enough, with that Forex Black Book indicator down there at the bottom, if I get a new red arrow, guess what that means? It gives me confidence that momentum is shifting back down. Take a look at where the red arrows show up here for this currency pair. The red arrows come after a rally higher, and it gives you that bearish momentum. We've seen an extreme rally higher for the CAD today or over the past few days. So if I see a red arrow and bearish momentum build back into this, it gives me confidence to stay in the current trade that I'm in, looking for it to go back down towards the 104.70 or so level. So a clear opportunity there today. And again, the risk is that it breaks above 105.80 and continues to pressure higher, and I'll close the current sell trade I'm in if it breaks that blue zone and potentially look to shift that position to go back up again. Let's take a quick look at a couple of other pairs. The main focus, I want to go over here to the US yen. I'm going to throw a quick trend line here. This is a clear area for potential resistance, but also a break point. If you look at that bearish trend line right there coming down from the highest highs, guess where we're challenging right now? I'm going to try and get that exact there. Guess where we're challenging right now? Right there into that bearish trend line. If it stays underneath that trend line, then we are likely looking for it to go back down. If it breaks above that trend line, we're likely looking for a continuation of the previous uptrend, coming all the way back from about a year ago. We were in an uptrend. We've gone into a period. This triangle pattern has been developing over the past several months, and if it breaks above that triangle pattern, we're likely looking for it to go higher. But as long as it stays underneath it, there's potential resistance here. I'm going to put one line right about right here, and we'll actually probably put two lines here. Let's put this one right here and this one right here. And this is our resistant zone because we've seen consistent behavior back here left-hand side into the 99.60s, over here on the right-hand side into 9900. So between 99.10 or so and 99.60, we see historical support and resistance all along here. So let's go ahead and highlight that real quick so we can see how that is going to work out. So for now, and this is going to be an easy assumption for me, as long as it stays under that blue trend, the bearish trend line, and under that blue zone, there's potential for resistance and a reversal to go back down. If it breaks above there, we look for the continuation higher again for the US yen. This is a critical decision zone for this currency pair between 99.10 and 99.65, staying underneath it to go back down, breaking above it to go back up again. Let's take a look at that same currency pair on the 4-hour chart, and you can see currently we're finding resistance under the blue trend line, under the blue shaded area. Again, it gives you a clear way to evaluate your risk. And now that we're down here, I'm going to actually move this down just a hair, down closer towards the 55 level. And it gives you a clear way to evaluate risk to potential reward. I think if it does bounce off of this level, your next area of potential support is down here into 98.30. Beyond 98.30, we're going to go back down here towards the 97.65 level. The risk here is that it breaks above this blue trend line and above the 99.50 level and continues to pressure higher. So if you're looking for a selling opportunity, you're looking for a sell into the blue shaded area as close as possible to the blue trend line. Your risk is just above the blue shaded area, and you have profit targets now to shoot for back to 98.30 and 97.60, and of course a complete turnaround in the direction of that bearish trend line. We look for much lower and a new low to be made. Again, with the Forex Black Book indicator, if I see a new red arrow show up, take a look at where all the red arrows for the Forex Black Book indicator showed up here. They all showed up at the top of this blue trend line. As it tagged here, we see red arrows. Here we see red arrows. Here we see red arrows. Now that we're into that blue trend line again and into that blue shaded area, if we see a new red arrow with the Forex Black Book, it gives us confidence that that has potential to go back down. Now, unfortunately, we don't get bank flow levels for the U.S. yen. We don't receive them on this currency pair, but if we were to get them, I might suggest that they would likely be somewhere here into this blue shaded area right now, because we can actually see where we're finding resistance even without those bank flow order levels. Let's take Fibonacci of this last high down to the current low, and very interesting here, taking Fibonacci of just this last high up here, right here where it challenged into the top of that red dashed line, down to the low, puts the 786 fib right here at 99.05. Again, we have a confirmation of resistance using naturally recurring patterns based on Fibonacci into the 786 fib at 99.05 into that blue trend line, giving you a clear reason to look for resistance here and a possible selling opportunity. Again, I'm already in a sell here. I took a sell here into this 9,900 level, looking for the bounce back down towards the 98.30 level or lower. If it breaks down through that barrier, we'll look for it to go down. I'll protect my trade by moving my stop to break even as it goes down. I know my time's running short. Let me take a look. I think I have enough time to go to one more currency pair here. We have a clear decision point here on the New Zealand dollar, and I was looking at this yesterday in the trade room. Here we are coming into this blue trend line, a clear decision point. If it breaks through that blue trend line, again, this is a barrier in the market. So if it breaks through this blue trend line, I expect it will continue to go down. If it bounces here, like it did the last time, into these lows, into the mid 7700s, we could look for this to go back up again. Interesting that we have a green trend bar with the Forex Black Book, so we'd look for new green arrows if we continue to find support into this blue trend line. Let's just put a couple of barriers here, a couple of historical barriers or support and resistance. There's one there. I'll put one down here. If we break down through that blue trend line, through the 7770 level or so, that becomes our next support. 7700 is that bottom black line, and of course through there we'll likely look for it to go lower. If we turn around from here, of course back to 7830 is a potential resistance, but beyond that I think we're likely looking for it all the way back up here closer towards the 7935 level, and then beyond that we could even take a challenge all the way back up here into the 8090s, 8100 level. Consistent barrier of resistance there into that level. You can see resistance here, resistance here, resistance here, and support all the way on the left-hand side, close to the 8100 level. So consistent barrier there. If it ever, over time, could be 2 years from now, who knows? If it ever breaks above 8100 or challenges 8100 again, we now know that if it breaks above it, we're likely looking for it to go higher, but there's potential resistance there. Let's take that information down to the 4-hour chart. As we look here on the 4-hour chart again, there's that low into that current trend line. We saw it hold here into the 7830s yesterday for quite some time. Now we're challenging into the blue trend line. I'm going to throw in some Fibonacci here. From the low to the current high, we could see the 0.886 fib sitting here into the 7775 level. So again, there's a clear area of potential support here. If this is going to turn around and begin going back up, this is the spot it's going to happen. We're going to look for support here into the blue trend line, a low risk scenario, because it's likely that if you're looking for a buy here I'm just going to put a line right on the last low. If you're looking for a buy here into the blue trend line and into this last low and into the 886 fib, you just don't want it to break underneath 77.50. So selling it right now, not a good idea. I'll just say right now, if you were to sell it right now, you have a high risk of support. Why do I know that? Because all I have to do is look back in time. Selling it right now, not a good idea. If you're looking to sell this, you want it to go up first. Rally into resistance first before you would even consider selling it. Uh, right now is a lower risk. It's a high risk sell scenario because you're running into this barrier of support. You'd want it to go up first, probably all the way back up to 78.35 before you would even consider a selling opportunity right now. This becomes a lower risk, higher reward scenario for a buy here for the New Zealand dollar today. All right, I've gone through a lot of stuff. Let me just, my time is running a little bit short here. I want to go back over to the slideshow. Just let me know if that slideshow comes back up so I can continue back on. It should be back up now. Let's see. Yep. All right. Let me go over to this quote real quick. Take a look at this quote. It's from Benjamin Franklin. He said, "Tell me and I forget. Teach me and I may remember." That's what we've been doing. Involve me and I've learned and I'll learn. You know, I've said a lot of stuff in today's session. I've been kind of trying to go a little bit quick to get as much in as possible. And the truth be told, you know, you probably won't remember everything I said. So I want to give you a chance to come back and get involved and spend some more time with me. So what I did is I came up with a suggestion that we provide a very low cost or low price way for you to spend a couple of hours a day with me in a daily trade room. I run a trade room every day. It's about an hour and a half, hour and 45 minutes every day. Live trade room. You can ask questions looking at live charts just like what we've been doing today. So I want to give you the opportunity to spend a couple hours a day with me in my live trade room over the next 30 days for a low cost, as well as getting all of those indicators that I just pointed out, the bank flow indicators that I pointed out, and the you'll have an opportunity to have those. You'll have an opportunity to have these Forex black book indicators and use them during that 30 days. Now, I'm going to tell you what we came up with, and it's only going to take a few minutes, so here's the rundown. And trust me, you can relax. This isn't one of those big product launches where you're going to get pitched for $1,000 or something like that, or thousands of dollars. This is a great deal. We want to give you the opportunity to experience, you know, results of my trading strategy firsthand for 30 days for literally the amount of money you might have in your pocket right now, or dig out of the center console of your car. But before I tell you the price, the real question is, how much is it worth to you to finally start making real life-changing money that you might have only dreamed about in the Forex? Let me put it another way. How much would you invest right now in order to quit your day job and make a living trading? All of that is probably much higher than you're going to pay for just a 30-day trial of coming into my trade room every day and using some of the softwares that I do. Most people I talk with would jump at this opportunity for $1,000, but here I'll just reveal it right now. It's just $1. What we're going to do is provide you 30-day access for just $1 into this for my trade room for 30 days, a couple hours a day for 30 days, just for $1. So I see that somebody just posted up the link there for you. If you want to click on over to that, you can start your 30-day access. You could be in the trade room later on today with me tomorrow and all throughout the next 30 days. Now, while you're registering, let me go over quick and cover all the tools and training that you're going to get access to using that 30-day access. First off, like I said, you're going to have access to my daily trade room. In this trade room, you'll get to see me implement these strategies in the live markets on a daily basis. This is going to help jumpstart your trading. If you've never traded Forex, it'll be a good place as a stepping stool to get you involved in the Forex. Again, this is going back to my advice, or the advice from Benjamin Franklin gave us. I want to get you involved in the process every day so you can become a successful trader. In addition to getting my live trade room on a daily basis, like I said, we're going to give you the Forex Black Book indicators to get started into this. This includes the proprietary target levels, the trend identifier, that red and green bar at the bottom, and the arrows, the signal generator. And this, these indicators are going to ensure that you're getting in the right direction at the right time. They're also going to assist you in getting every last drop of profit out of the market using those profit targets. Now, these three kind of complement each other and work together to ensure you're going to be taking some of the most profitable trades, especially when you implement it into a clear trading strategy. Now, of course, I'm not going to send you away with just that. We're going to show you how to use all that. We're going to give you a 5-module video online training course as part of this package for just $1. Now, we just didn't slap together some info and put it on a video. We brought in an adult education expert to help craft a pretty good curriculum that actually works to impart some knowledge into to you clearly and effectively. This 5-module course, you'll learn to take profits using the tools and strategies that I put out there. And it's important for you to understand currently this is just accessed through today's webinar. We took this whole package off the market a few months ago. It was being sold for $2,000 in a webinar special a couple of months ago. So again, you're getting access to this for just $1 for 30 days. Real quick, I want to tell you about a little bit of a bonus that goes along with this, and that's the members website. On the members website, we've put in all of the we put in several trade examples, the archive of the daily trade rooms. You can go back and watch historical trade room archives, past analysis videos that I do every day, and a ton of other tools. Additionally, each day I also start off my day doing like a 30-minute video of all the 7 major pairs, giving you kind of a pre-market boost or some heads up of things to watch for the day. So not only do you get access to the videos, you'll get access to the archive of all those videos, and you can go back and watch them and see how the market has progressed over time. And I think that's kind of priceless. So let me be clear. I just want to make sure you understand everything you're going to get. Normally, like I said, this package has sold in the past for $2,000. We're getting rid of that. It's just 30 days for $1 right now. You're getting all those tools for 30 days for that package. And there's the link at the bottom of that slide, and somebody had posted there on the message window there, so hopefully you can take advantage of that. Again, it's just 30 days. I mean, just $1 for 30 days. You could probably dig that change out of your, out of your car or out of the couch cushions or something like that. Take advantage of it. Spend 30 days, especially if you're new to Forex or never traded Forex before. It's going to be a great way for you to get involved in the market, learn some ins and outs about the currency trading market. I go through 7 major currency pairs, but I also cover many of the cross pairs in the trade room on a daily basis as I get questions about them. It gives you the opportunity to ask those questions during the trade room. Just a couple of questions are coming through. Yeah, it's an auto renewal. It's $97 after the first 3 months, I think. Actually, let me go ahead on this slide. I think it should. The first month after the 30 days is $297. It's kind of an activation fee, but after that it is $97. But I don't think that there's not going to be. It's a 30-day trial, folks. It's if you don't decide before 30 days is up that you don't want to automatically renew or you don't want it to renew for that continuation, just send us an email and cancel it. You might spend 2 or 3 weeks in the trade room with me and decide that it's just not for you, or Forex trading isn't for you. It's just $1, and I can't really stress that enough. It's very low cost for you to get involved in this program. What time on my trade room? I usually start at 10 a.m. Eastern time. I'm on the East Coast of the U.S., so I start at 10 a.m. Eastern time, and it goes for about an hour and a half, hour and 45 minutes, all the way to 11:30, 11:45, depending on what the discussion is. I get lots of people asking me questions in the trade room, and it's a great way for people to be able to do that. So it depends on how many questions I'm getting, how long the trade room lasts, but it does start at 10 a.m. Eastern time if you're looking to be involved with that trade room. Let me just go back real quick and see if I can hit a couple of the questions. Take the time there to go ahead and sign up for that trial. I think it's going to be well worth the dollar that you might pay for 30 days of access to all of that. Let me see. I'm going to see if I can go back to some of these questions. Trying to see some of them here. I think I mentioned that. Looks great in hindsight. All of these charts I've been looking at are live real-time charts. Uh, let's see. There's just a few questions that have come through that some other folks have answered. Uh, the bank flow, there will be an upgrade to that. You know, it's $1 for access to these things that you're seeing, the live trade room, the Forex Black Book indicators, the 5-module training course, the access to the members club where you're going to get the archives. I think it's an additional $1 for the bank flow. That will be an option that you can choose. But all the Black Book indicators uh, you can get access to for that $1. Let's see. I think most of the questions look like they have been answered on by some other folks in there. Uh, here's a good question. What time frame chart do I actually trade from? I usually make my entries from either the 1 hour or the 4 hour chart. I try to stay away from the 5 minute and the 15-minute chart and the 30-minute chart because I think there's too noisy and you fall prey to false breaks on those smaller compressions. That's really, you know, so usually the 1 hour or the 4 hour chart are what I make my trades based on. You know, it's $1 for 30 days, not $1 a day. It's $1 for 30 days. I use the MT4 or MetaTrader 4 platform for the indicators specifically work on that platform. I think I answered the question how much after 30 days. So let's see. It looks like most of these questions have been answered. What time's the trade room? Can you use it to trade futures? Well, my strategy of support and resistance, you likely could. I've never traded futures, but I've usually just traded spot Forex. But the strategy of support and resistance, I believe, could probably be translated over there. The indicators themselves, they're designed to work on MT4 charts. Uh, In trading on 15-minute charts, to use any higher time frames, only chart support and resistance where there be too many levels overlap. I don't particularly look, Peter, at the 15-minute chart. Like I said, it's primarily the 1 hour and 4 hour, basing my trends on the daily chart. No, the trade room goes until 11:30, 11:45 Eastern time, and then I close down the trade room for the day. However, you know, you'll have access to some other contact information as a subscriber. For how long do you have access to the courses? Well, as long as you're a subscriber, that 30 days for $1, you'll have access to the courses. If you continue on, you'll have continued access to the courses. If you cancel, the courses, of course, you won't have access to because they're on the members page. Actually, the trade room is recorded on a daily basis. Somebody's asking if the trade room is recorded. I do record it on a daily basis and post it to the members' website. So you can go back if you have, you know, if you can't be there live, you can go back and watch that, post it, you know, just like 10, 15 minutes after the trade room is over. I don't really have a broker I recommend. They're all, you know, there's a lot of good ones out there. I don't really have a broker I recommend. Of course, the indicators work on MT4, and MT4 is provided by many different brokers. Not necessarily. Are most of my trades fades into resistance? Not necessarily. Many of them are, because those become very low risk, high reward. But simple breaks of a level also become a possibility. That could be a break of a support for a continuation as it goes back down, or a break of resistance as it goes back up. This is a great example of it right here. Let me put a highlight here. I'm going to go real quick. Hopefully I can get it back over to my charts real quick. This is a great example on the New Zealand dollar. I'm going to insert just this highlight right here where the blue shaded area is. We saw resistance here, resistance, finally broke above it. That resistance then became support. So it's not, as it was going up in this uptrend on the left-hand side of the chart, that became a buying opportunity in the direction of the trend. Same thing here, as it was going up, it broke above it, broke above that blue shaded area. Support was found there, support was found there. So buying into the support in the direction of the trend was a possibility also. As it came back down on top of support, it wouldn't necessarily be only selling into resistance, but also as a break through one of those levels. So that's, I think that's going to round it out. Do you supply trading software to keep after 30 days? All the indicators that we're supplying right now are only part of that 30-day trial. All right, folks, I think I have run out of time. I know you've been here for 24 hours, and I don't want to keep you any longer than necessary. I appreciate the time that you've allowed me to spend with you. Go ahead and fill out that form. Get instant access to all the tools that we just discussed. You could be with me in my trade room later on today. Again, it's just $1. If you decide not to use it any longer, send us an email and cancel it. There's not going to be any hassle about that. That's about all the time I have to spend with you today. Thanks for joining me. Go ahead and get registered. Hope to see you in the trade room soon. Appreciate it. Thanks.